There is a moment in trading that almost nobody talks about. You have done the work. You have watched the charts. You have learned a strategy. You have marked your levels. You have studied other traders. You have taken notes. You have probably had those days where everything seemed to finally make sense. And then you open your account and look at the results. Still inconsistent. Still taking losses you know you shouldn't have taken. Still giving back good weeks. Still watching trades move exactly where you expected after you got stopped out. Still asking yourself the same question. Why am I still not profitable? And this is where things become frustrating, because at some point you stop believing that the problem is knowledge. So you search for another strategy, another indicator, another entry model, another mentor, another time frame, another way of reading the market. You tell yourself that maybe the missing piece is somewhere on the chart. But what if the reason you are still not profitable has very little to do with what you know about the market? What if you already know enough to become consistent, but your behavior keeps preventing that knowledge from showing up in your results? That is a much harder problem to accept, because if your strategy is the problem, you can replace it. If your indicator is the problem, you can remove it. If your entry is the problem, you can find another entry. But if the problem is the way you respond to uncertainty, there's nowhere to hide. The chart is no longer the only thing you have to study. You have to study yourself. And that is where the real work begins. Think about what happens after a loss, not the loss itself. The few minutes after it, you close the trade, you look at the chart, you see where price eventually went, and something inside you starts arguing. I knew it was going to go there. I entered too early. If I had given it a little more room, if I had used a bigger stop, if I had entered 5 minutes later. And suddenly, the loss doesn't feel like information anymore. It feels personal. So you look for another trade. Not because another valid opportunity has appeared, because you want the feeling of being right again. That distinction can quietly destroy an account. The next trade may even win. And that creates another problem, because now your brain learns the wrong lesson. It learns that emotional trading can sometimes rescue you. You lose. You get angry. You enter again. You win. The discomfort disappears. So the behavior gets reinforced. This is how bad habits become part of a trading personality. Not because they work consistently, because they occasionally work just enough to keep you believing in them. And this is one of the reasons profitability is so difficult. The market does not punish every bad decision immediately. Sometimes a terrible trade makes money. Sometimes a beautiful setup loses. Sometimes you move your stop and price reverses exactly where you wanted it to. Sometimes you take a trade out of pure FOMO and it runs in your direction. That can be dangerous because your brain starts judging decisions by outcomes. You make money, so you assume the decision was good. You lose money, so you assume the decision was bad. But trading doesn't work that way. Imagine you follow your plan perfectly. You wait for your setup. You risk an amount you can comfortably lose. You enter where your rules tell you to enter. You place your stop where the trade idea becomes invalid. Then price hits your stop. You lose. Was that necessarily a bad trade? No. It may have been an excellent trade that simply didn't work. Now imagine another situation. You see price moving quickly. You weren't planning to trade, but suddenly the market starts running. You feel that familiar pressure in your chest. You think, if I don't enter now, I'm going to miss it. You jump in. Price continues for a while. You make money. Was that automatically a good trade? No. It may have been a terrible decision that happened to produce a favorable outcome. This distinction changes everything, because once you understand it, you stop asking only, did I make money? You start asking a much better question. Did I make the decision I was supposed to make? That is the question a developing trader needs to become comfortable with, because profitability is not built from winning every trade. It is built from making reasonable decisions repeatedly while accepting that individual outcomes are uncertain. And that sounds simple until you actually have money at risk, because when there is money on the line, uncertainty becomes uncomfortable. You can understand probability perfectly when you are looking at a historical chart. You can explain patience to another trader. You can point out where someone else entered too early. You can identify a beautiful setup after the fact. But when the candle is moving toward your stop and your own money is disappearing, your understanding is suddenly being tested. This is where many traders discover that they were not actually trading their strategy. They were trading their emotional reaction to uncertainty. And that is the real reason many people remain stuck. They keep trying to improve the strategy while ignoring the behavior that keeps destroying the strategy. You can give a disciplined process to an undisciplined trader and still get an undisciplined result. Give the same process to someone who can wait, accept losses, control risk, and follow rules, and the results can look completely different. The difference isn't always the strategy. Sometimes the difference is the person operating it. Consider a trader who has a perfectly reasonable setup. Price approaches an important area. There has been a clear move away from that area before. The market has already shown a reason to pay attention. The trader has a plan. They know where they want to enter. They know where they are wrong. They know where they want to take profit. Everything is prepared. But price doesn't immediately move. It sits there. One candle, then another, then another. The trader starts getting uncomfortable. They open a smaller time frame. Suddenly there are dozens of movements happening inside the same area. A small high forms, then a small low. Price moves up, then down. A candle looks bullish, then bearish. Now the trader's confused. 5 minutes ago, the setup looked clear. Now it looks terrible. So they enter early because they are afraid the market is about to leave without them. Or they cancel the trade because the smaller time frame made them nervous. Or they enter and then keep watching every candle until they can no longer tolerate the uncertainty. Nothing changed about the original idea. Their relationship with uncertainty changed. That is important because many traders think profitability comes from finding a setup that removes uncertainty. It doesn't exist. There is no entry that tells you with absolute certainty what happens next. There is no analysis that removes the possibility of being wrong. There is no strategy that makes losses disappear. At some point, becoming profitable requires accepting something your emotional brain doesn't naturally like. You can make a good decision and still lose money, and you can make a bad decision and still make money. Once you accept that, trading becomes much less personal. You stop trying to force the market to validate you. You stop needing every position to prove that your analysis was correct. You stop treating a loss like an insult, and that changes how you trade. Think about how many times you have entered a position and immediately started watching it differently. Before entering, you had a plan. After entering, you had hope. That is a subtle but massive difference. Before the trade, you were analyzing. After the trade, you were emotionally attached. The same chart that looked neutral 5 minutes earlier suddenly feels like it is doing something to you. Every candle becomes a message. Every pullback feels dangerous. Every move in your favor feels like a reason to close. You aren't just watching price anymore. You are watching your money. And when you watch your money too closely, your decisions can become distorted. This is why position size matters psychologically, not just mathematically. A risk level can look perfectly reasonable on paper, but if losing that amount would make you angry, anxious, desperate, or unable to sleep, then the risk may be too large for you. You might say, but it's only 2%. The market doesn't care about the percentage. Your nervous system cares about the amount. If that loss changes your behavior, the risk is too high. And once the risk is too high, everything becomes harder. A normal pullback feels like danger. A normal loss feels like failure. A missed opportunity feels like a disaster. A winning trade feels like something you need to protect immediately. Then you start making decisions to manage emotions rather than manage the trade. You move the stop. You close early. You increase the next position. You take another trade. You stop following the plan. And eventually, you look at the account and wonder why you cannot make progress. But look at what happened. The market didn't need to defeat you. Your reaction to uncertainty did the damage. This is why some traders can have a good strategy and still lose money for months. They are constantly interrupting their own edge. They enter when they shouldn't. They exit when they shouldn't. They change risk when emotional. They change strategies after losses. They increase activity when frustrated. They reduce discipline when excited. The strategy never gets a fair chance. Imagine giving a farmer a field and telling him to plant seeds. He plants them. Then 2 days later, he digs them up because nothing is happening. He plants them again. Then he changes the soil. Then he moves them somewhere else. Then he decides another type of seed must be better. At the end of the season, he has very little to show for all his activity. He worked constantly, but he never gave anything enough time to develop. That is what strategy hopping can look like in trading. You take 5 losses. You assume the strategy doesn't work. You find another strategy. You take 3 losses. You change again. You watch someone online make money using a different approach. You start learning that approach. Then the market changes. Now you are confused again. The problem may never have been the strategy. You never stayed with one process long enough to discover what its actual results look like. You judged it emotionally. And this is another uncomfortable reason traders remain unprofitable. They want certainty before they commit. But trading only gives you probabilities. You want to know that the setup will work? The market can only give you a situation where the setup has historically or logically offered a reasonable opportunity. You want to know where price will go. The market doesn't owe you that information. You want confirmation that you are right. The market can only show you what it is doing now. The rest is uncertainty. Your job isn't to eliminate that uncertainty. Your job is to make decisions that remain reasonable while uncertainty exists. That is a completely different way of thinking, and it changes the purpose of your trading plan. A trading plan is not there to predict the market perfectly. It is there to protect you from yourself when your emotions become loud. That is why rules matter. Not because rules make you smarter than the market, because rules give you something stable to follow when your feelings are unstable. Imagine you have just lost 2 trades. Now the third setup appears. It looks almost identical to the setups you normally take, but you hesitate. You think about the previous losses. You don't want to lose again, so you skip it. Price moves exactly as expected. Now you feel frustrated. You think, I knew it. Then the next setup appears. This time you enter aggressively because you don't want to miss another one. You lose. Now you're angry. So you take another trade. That one wasn't even part of your plan. This is how a trader can go from hesitation to FOMO to revenge in less than an hour. And notice what caused the sequence, not the market. The previous outcome, you allowed one trade to influence the next decision. That is dangerous because every trade is supposed to be evaluated on its own information. The market does not know that you lost the last 2 trades. It does not know that you need to make money today. It does not know that your rent is due. It does not know that someone online just posted a screenshot of a winning trade. It does not know that you have been studying for 6 months. Price is not obligated to give you your money back. That sounds harsh, but accepting it is strangely liberating because once you stop expecting the market to compensate you, you stop chasing it. A loss becomes a loss. A missed trade becomes a missed trade. A winning trade becomes a winning trade. None of them needs to become an emotional event. That doesn't mean you stop caring. It means you stop allowing the last event to control the next decision. This is one of the biggest differences between an emotional trader and a developing professional. The professional doesn't need the next trade to repair the previous one. They can lose and remain normal. They can miss a trade and remain normal. They can have a winning day and remain normal. That emotional neutrality is powerful, and it is not something you are born with. It is developed through repetition. You learn to experience the emotion without obeying it. You feel FOMO, but you don't enter. You feel fear, but you don't automatically close. You feel frustration, but you don't revenge trade. You feel excitement, but you don't increase your risk. The emotion can exist. You simply stop giving it control of the account. That is discipline. Discipline isn't feeling nothing. Discipline is being able to feel something and still follow the process. And this brings us closer to the real reason you may still not be profitable. You may be trying to solve a behavioral problem with more information. You lose a trade, so you watch another trading video. You have a bad week, so you learn another strategy. You hesitate, so you search for more confirmation. You get stopped out, so you learn another way to place your stop. You miss a move, so you study another entry model. Learning is valuable. But there comes a point where more information becomes another form of avoidance because information feels productive. Changing yourself doesn't. Watching a video is comfortable. Sitting through a losing trade without interfering is uncomfortable. Learning another strategy is exciting. Taking the same setup 50 times and recording every result is boring. Finding another entry technique gives you hope. Accepting that your current process may already be sufficient, but you aren't executing it consistently, forces you to look at yourself. And that is why some traders stay beginners for years while becoming extremely knowledgeable. They know a lot about trading. They simply don't do the same things consistently enough for that knowledge to become performance. Think about an athlete. You cannot watch 100 hours of boxing and expect your body to behave like a professional boxer. Knowledge matters. But performance comes from repeated execution under pressure. Trading is similar. You need to know what you are looking for, but you also need to know how you behave when you don't get it. That second part is where many traders fall apart because the market will constantly tempt you to abandon your process. It will move without you. It will reverse after you enter. It will approach your level and turn away before your entry. It will stop you out and then continue in your original direction. It will create beautiful moves while you are sleeping. It will sometimes make a setup look perfect and then completely fail. You cannot control any of that. You can only control what you do when it happens. And perhaps that is why you are still not profitable. Not because you haven't found the perfect setup, because you are still trying to make trading predictable enough that you don't have to experience discomfort. You want certainty. The market offers probability. You want control. The market offers opportunity. You want every trade to work. The market offers winners and losers. You want to know when the move will happen. The market moves when it moves. That conflict between what you want and what the market actually is creates a huge amount of unnecessary suffering. Once you stop fighting reality, trading becomes simpler. Not easy, simpler. You can look at a chart and say, this is the area I'm interested in. Then wait. If price reaches it and the conditions are right, you act. If the conditions aren't right, you do nothing. If the trade loses, you accept it. If the trade wins, you don't suddenly become a genius. You simply continue. That sounds almost too ordinary, but consistency is often ordinary. It isn't dramatic. It doesn't always feel exciting. Sometimes professional trading looks like staring at a chart and doing absolutely nothing. You wait for hours. Nothing happens. You close the chart. That can feel like a wasted day to a trader who believes productivity means taking trades. But sometimes not trading was the most professional decision you made that day. You protected your capital. You protected your attention. You protected your emotional state. You avoided forcing an opportunity that wasn't there. That matters because every trade carries more than financial risk. It carries attention, emotion, decision-making energy. And if you spend those resources on low-quality opportunities, you become less capable of recognizing the high-quality ones. This is why boredom can be dangerous. You sit in front of the screen, the market is slow. You have nothing to do. You start looking for something, a small movement catches your attention. You zoom in, you find a reason to enter. The trade doesn't come from opportunity. It comes from boredom. Then the position moves against you. Now you have something to watch. Your boredom disappears, but it has been replaced by anxiety. This is why some traders unconsciously create trades. They aren't always trying to make money. Sometimes they are trying to feel something: excitement, hope, relief, validation, control. Trading becomes emotionally rewarding even when it is financially damaging. And until you recognize that, you can keep telling yourself that you simply need more discipline. But discipline becomes easier when you understand what you're actually trying to escape. Maybe you're not entering because you believe the setup is good. Maybe you're entering because sitting still makes you feel like you're falling behind. Maybe you're not closing the trade because the market has invalidated your idea. Maybe you're closing because seeing unrealized profit disappear feels painful. Maybe you're not moving the stop because your analysis changed. Maybe you're moving it because you don't want to accept the loss. Maybe you're not increasing your risk because the next setup is better. Maybe you're increasing it because you want the previous loss to disappear. Once you see these patterns, trading becomes much more honest. You can catch yourself in the moment. You can say, I'm not taking this trade because the setup is there. I'm taking it because I'm afraid of missing the move. That realization alone can save an account because you have created a gap between the emotion and the action. And inside that gap is choice. That is what you need. Not perfect emotions, choice, the ability to pause, to ask yourself why you are doing something before you do it. Imagine price suddenly explodes upward. You weren't in the trade. Your first reaction is frustration. You feel like you missed an opportunity. Your mind starts creating a story. I should have entered. I knew it would happen. This market always moves without me. You want to chase? Now pause. Ask yourself, if I had not seen the move already happen, would this still be a valid setup? That one question can separate analysis from emotion because after a large move, the mind naturally wants to participate. But the fact that price has already moved does not mean another trade exists. Sometimes the best trade is the one you don't take after the opportunity has passed. This is another reason traders remain unprofitable. They treat every movement as an opportunity. It isn't. The market is moving all the time. Your job is not to participate in all of it. Your job is to participate only when the conditions you understand are present. That requires patience. And patience is difficult because patience produces nothing immediately. There is no dopamine from waiting. Nobody celebrates the trade you didn't take. Nobody posts a screenshot of the position you wisely avoided. Nobody congratulates you because you closed the platform after deciding there was nothing worth trading. But those decisions matter. A trader can lose money by being wrong. They can also lose money by being right too often in the wrong way. They can correctly identify where price is going and still lose because they entered too early. They can correctly identify the direction and still lose because they risked too much. They can correctly identify the setup and still lose because they moved their stop. They can correctly identify the move and still make no money because they were too afraid to enter after the previous loss. So profitability is not simply about being good at reading charts. It is about turning your market understanding into consistent behavior. That is a different skill, and it takes time. This is why you should stop measuring your progress only by your account balance. Your balance matters, of course, but if you only judge yourself by money, you will become emotionally attached to short-term outcomes. Instead, look at the quality of your decisions. Did you take trades that met your criteria? Did you respect your risk? Did you accept losses without changing your behavior? Did you avoid trades that were driven by FOMO? Did you leave your stop where your original plan placed it? Did you allow a valid setup to play out without constantly interfering? Did you stop when your emotional state became unstable? These are signs of development. And ironically, focusing on these things can make profitability more achievable because you are finally measuring what you can control. The market outcome is not fully under your control. Your execution is, your risk is, your preparation is, your patience is, your response to a loss is, your response to a missed trade is, your decision to close the platform is. And if you build your trading around those things, you stop asking the market to give you something it cannot give you. Certainty. There is another uncomfortable question you need to ask yourself. What are you expecting trading to do for you? Not what strategy do you use, not what pairs do you trade. What are you expecting trading to change in your life? Because sometimes the pressure to become profitable is not really about trading. It's about what profitability represents. Freedom, money, respect, security, escape from a job, a better lifestyle, proof that you can succeed. And when trading becomes responsible for delivering all of those things, every trade becomes emotionally heavier. A normal loss doesn't feel like a normal loss anymore. It feels like you're moving backward. A missed trade doesn't feel like a missed trade. It feels like you missed your chance. A slow month doesn't feel like part of the process. It feels like you're failing. Now imagine trying to make calm decisions while carrying all of that emotional weight. It becomes extremely difficult. This is why you need to separate the goal of becoming a better trader from the desire to change your entire life immediately. The more urgently you need the market to pay you, the harder it becomes to wait for the market to actually offer you something worth taking. You start forcing, and forced trading usually creates more problems than it solves. A professional mindset begins with a different relationship with money. You are not going into the market to make this particular trade pay your bills. You are participating in a process where any individual outcome can be positive or negative. Your job is to survive long enough and execute consistently enough for your edge to have a chance to express itself. That is slower, but slower is not the same as worse. A business doesn't become successful because it had one amazing day. An athlete doesn't become great because they won one match. A farmer doesn't judge the entire harvest by the first week. Trading shouldn't be judged by the last trade, or the last day, or even the last few days. You need enough repetition to see what your process actually produces. And this is where journaling becomes useful, not as a diary of emotions, as evidence. Record the trade. Why did you take it? What conditions were present? How much did you risk? Did you follow the plan? How did you feel before entering? How did you behave once you were in? Did you interfere? What happened afterward? Then look at the pattern. You may discover something uncomfortable. Maybe your strategy actually performs reasonably well, but you keep taking trades outside the strategy. Maybe your winners are large enough, but you keep closing them early. Maybe your entries are fine, but your position size makes normal losses emotionally unbearable. Maybe your analysis is good, but you don't take enough of your valid setups because you're afraid after losing. Maybe your problem isn't that you lose too much. Maybe you quit too early. And once you have evidence, you don't need to keep guessing. You can work on the actual problem. This is what makes trading development different from constantly searching for a secret. You don't need a secret. You need honesty. Honesty about your behavior, honesty about your expectations, honesty about your risk, honesty about your weaknesses, honesty about what happens when nobody is watching, because that is the trader you actually need to improve, not the version of you who understands everything while watching a chart replay. The real version, the one who sees price run without them, the one who gets angry after a stop out, the one who wants to make back the loss, the one who checks the account balance every few minutes, the one who changes the stop, the one who enters because someone else posted a winning trade. That person is the one who needs the training. And there's nothing shameful about that. Every trader has some version of this battle. The difference is whether you keep hiding from it. So the next time you take a loss, don't immediately ask, what did I do wrong? Ask something more specific. Was the decision wrong, or was the outcome simply unfavorable? If the decision was good, accept the loss. If the decision was bad, identify exactly what made it bad. Not, I have no discipline. Be specific. I entered because I was afraid of missing the move. I increased my risk because I wanted to recover. I closed early because I couldn't tolerate giving back profit. I moved my stop because I didn't want to accept being wrong. I changed strategies because I didn't give the original process enough time. Specific problems can be fixed. Vague self-criticism cannot. And eventually, something begins to change. You stop needing the market to make you feel good. You stop needing every trade to win. You stop staring at every candle. You stop chasing movements that already happened. You stop treating a loss as an emergency. You begin to understand that a trade is simply one event in a much larger series. That is when trading starts to feel different. Not because the market became easier, because you became less fragile. You can wait. You can miss. You can lose. You can win and still follow the same process. That is a powerful place to reach, because now your confidence doesn't come from knowing what price will do. It comes from knowing what you will do regardless of what price does. And that may be the real shift you have been looking for. You've spent so much time trying to become better at predicting the market that you may have overlooked the person making the decisions. You were looking for a better entry, but maybe you needed better execution. You were looking for more confirmation, but maybe you needed to become more comfortable with uncertainty. You were looking for another strategy, but maybe you needed to stop abandoning one before you understood it. You were looking for a way to avoid losses, but maybe you needed to learn how to lose without changing who you become afterward. You were looking for the trade that finally makes everything work, but profitability was never supposed to come from one trade. It comes from thousands of small decisions made with enough consistency that no single decision has the power to control your future. And maybe that is why you're still not profitable. Not because you are incapable, not because you haven't discovered some hidden secret, not because the market is designed to take your money, and not because there is one perfect strategy waiting somewhere for you. You may simply still be allowing temporary emotions to make permanent decisions. Fear tells you to close, you close. FOMO tells you to enter, you enter. Anger tells you to increase risk, you increase it. Hope tells you to move the stop, you move it. Excitement tells you to trade again, you trade again. And then you look at the results and blame the strategy. But the strategy was never given control of the account. Your emotions were, that realization can hurt, but it can also be the beginning of real progress because you cannot control the market. You cannot control whether the next setup wins. You cannot control whether price reaches your target. You cannot control whether another trader makes money today, but you can control whether you chase. You can control how much you risk. You can control whether you move your stop. You can control whether you take the setup. You can control whether you walk away, and you can control whether one loss becomes 5. That is where your power actually is. So the next time you sit in front of the chart, don't ask yourself how you can force a winning trade. Ask yourself whether you can make a good decision. If the setup is there, take it according to your plan. If it isn't, wait. If you lose, accept it. If you win, stay grounded. If you miss the move, let it go. If you feel the urge to revenge trade, recognize what is happening. If you feel FOMO, recognize it. If you want to move the stop because the loss hurts, recognize it. You don't have to become emotionless. You just have to become aware enough that your emotions stop making decisions for you. Because eventually, profitability stops being about finding a way to win more trades. It becomes about removing the behaviors that keep destroying the good decisions you already know how to make. And when that happens, something strange happens. Trading becomes quieter. You don't need to be in the market all the time. You don't need to predict every movement. You don't need to prove that you are right. You don't need to recover every loss immediately. You don't need to chase the trade you missed. You don't need to make today profitable. You simply need to execute the process in front of you. One decision, then another, and over enough trades, the results begin to reflect the quality of those decisions. Not perfectly, never perfectly, but consistently enough to matter. The market will still surprise you. You will still lose. You will still have days where you make mistakes. You will still feel fear. You will still feel greed. You will still feel the urge to interfere. The difference is that those feelings no longer have to determine what happens next. And perhaps that is the real reason you have not become profitable yet. You have been trying to master the market when the first thing you needed to master was your response to it, because the market does not need you to be right. It only requires you to make decisions, and your future as a trader will be shaped less by the trade you get right than by what you do when the market does something you didn't expect. That is where the real trader is built, not in certainty, in uncertainty, not in winning, in how you behave when you lose, and not in finding the perfect strategy, but in becoming the person who can execute a good process long enough for it to matter